Assalamu alaikum. A very warm welcome you to all at the analyst briefing of Systems Limited. This is the third quarterly result, which is the 9-month 2024 analyst briefing. I, on behalf of the management of Insight Securities, would like to welcome you all to the analyst briefing. Um, this result is a bit special as far as the numbers are concerned. I think this is probably the highest top line number in the last four quarters, and it also comes up with the highest gross margin number, right, 25.3%, and also the highest net margin number at 12.6%. So I think everyone is mostly familiar with the company, what has been happening. Systems regularly does a quarterly analyst call. But obviously, these numbers tell a different story. So rather than going into much detail, I would have the man himself, which is Mr. Asif Peer, to dwell on the numbers and tell us what the magic is here all about.
Okay, thank you, Zubair. Thank you, everyone. Good morning, good afternoon, good evening. Assalamu alaikum, everyone. I know we have a lot of people joining from different countries as well. So, welcome and thank you for joining. So, we will just go into, of course, I will skip the company introduction, what we do. I'm assuming most of you guys know about us. So, we'll just go into the numbers, and I would love to spend more time in Q&A. So please feel free to ask the questions in the Q&A section of the Zoom. Don't put in the chat, but Q&A section. So moderator Zubair is going to moderate and ask the questions. My colleague Ruhi is going to respond to the questions in the Q&A section directly as well. So we will be doing both. So online answers as well as I will take few questions and answer as well. So we'll do parallel. So please read the responses in Q&A as well, and also listen whatever I just say. Thank you. So we will just start with the key stats and market overview first. So as I just wanted to reflect the strong quarter, as Zubair said, I think I just want to say that, of course, these numbers in the absolute term is the highest in the history of systems, from top line, from gross profit and operating profit, of course, and then not in the net profit, because net profit comes with exchange gain and loss, which we don't, as a management, it's not in our control. So if you look at all three numbers, revenue, GP, and OP, they're the highest in the history of systems, right? So we have beaten all the records from that perspective, and strong growth has been shown from the numbers perspective, despite of other things, inflation, appreciation, currency appreciation. We were able to turn around the numbers, and you can see the strong growth of 28% versus last year in dollar terms, and 22% growth in the PKR terms. This is the first time I'm reporting the other way around, which doesn't happen. It's usually the PKR is highest and dollar is low, but it's different this time. So we have 28% dollar-based growth, which is I think which is phenomenal from the base where we are today. And also the margins have increased as well, not as quite as the top line growth, but I'll explain that in the next slide, why and what we are doing, and how these numbers have improved, and how these numbers are going to be improving in the future as well. So this was the next. So I think I just want to share overview of just at a constant, because of course your company has 93% foreign exchange revenue now, for dollar-based revenue, which is, I think we will be the only one or very few companies who have 93% dollar-based revenue in the country. So if you look at it, of course, if we just actualize like at a constant currency, we just say that last year in quarter 3 2023 of last year, whatever the dollar rate was, we just took it the same with a zero depreciation, right? If you look at that, like look at percentage of GP on a constant currency basis is 27%, which is close to, we used to do 27, 28% in the past as well. So if the currency would have stayed the same, we would have our margins percentage would have been very different than what we you see today. So no depreciation, no nothing devaluation. This is the picture you can see. The numbers have should have been very reflected in a different way. So so that's a picture we wanted to show and share, that this is what currency neutral results are. Currency neutral results, no change. Okay, similar dollar rate as compared to the last year. So now, growth and efficiency levers, of course, what has happened? I think this year has been phenomenal in the history of systems, what we have done. The growth, of course, you can see close to 30% dollar-based growth. It doesn't happen at this base. Of course, I think systems, you guys have been seeing this 30% dollar-based growth year on year for many years. But of course, our base was smaller. Now base has been bigger, and we have been able to achieve that. I think it happened because of our strong trajectory and signing up large enterprise customers, that what we have been signing, and that's giving us the growth impetus and growth momentum. And that sets the foundation for us for this year and for the following year as well, because almost all of our customers are recurring customers. And I think this has been phenomenal from that perspective. We are sitting in quarter 4 and we have a backlog, we have signed agreements, we have large customers who are committed for the next years, and so on and so forth for the longer term. Enterprise, almost all of the enterprise customers that we had, we didn't lose any customer. All of them have shown the growth, which is again shows uh, the growth momentum that needs to be continued for the following year as well. So that is services business. This is the key, that your existing customers, you keep growing, and of course you sign up the new customers which become the existing customers in the following years. Um, Due to our regional presence and due to our regional success, I just want to highlight, in services business, channels and partners play a huge role. So my channel means for me is Microsoft. Partnership means, say, for example, Accenture. Okay. So channels don't give you the business if you don't sell it for them for their licenses, right? So now we have signed up these enterprise customers. So every channel comes to us instead of we going there, that we want to sign a partnership with you because you can take us to your customers. And when you take them to one customer, they bring 3 customers to you as well. So that always happen in our business, right? And that I'm glad that this with our leadership team and with the regional team, they have done a great job in doing that kind of a brand building and signing up those customers where the channels are coming to us and we are signing up those, and we have signed it. And so what I'm saying is it's a multiplier effect is definitely going to come in the future as you keep doing it, because now we are visible, and you have a seat on the table. When you get scale makes you bigger and better. That's the only way. Overall efficiency improvement is there, because earlier when we had a luxury of these devaluations, the huge devaluations, we were building the bench, large bench, to make sure we could have afford. And now we just streamline that process further, that how we can be more efficient and increase the efficiency percentages, so we able to live at this current dollar rate as well. So that is a major change. For the last 3 4 years we were enjoying it differently. Now this year we refocused, and we were able to uh, start living at the current rate. So if the currency doesn't appreciate, which is the normal, which is abnormal in what we've seen this year. If it stays the same, I think we have done a great improvement at this level. And in direct overheads, of course, in services business, we are not increasing our fixed overheads as the percentage of sales. Of course, we only increase the variable people cost related to the people related costs. So that is definitely improving our gap. So as we keep growing, our margins are keep improving, showing the improvement. And as I shared in the previous slide, even with the constant currency, or we have like 400 million of exchange loss this year, so far in 9 months. Of course, with the constant currency next year, or quarter to follow, even if it is not devalue, I think it will be a great improvement in the overall scheme of things. Next. So this is the fact sheet. I think, as you can see, the constant revenue growth from all the direction perspective. We have shown a 9 month, like last year, even in the whole 2023 was 190 million. In 9 months, we have reached at about 174 million. So you can imagine the growth trajectory that what we are seeing from a top line perspective, the bottom line also from operating profit perspective, which I've shared in the past, previous slide as well. We are humbled and grateful. We have again received the Forbes Asian Best Under a Billion award this in September as well, which is fifth year in a row. We will be the only Asian company or one of very few who have received consecutively 5 years in a row. That shows our sustainability, our persistence, and our results that what foreign research companies look at it. And consistency is the key. So 5 years in a row, we are proud to share that with all of you. Microsoft, again, 4 years in a row, inner circle, which is again shows the consistency that we deliver, and the rest of the partnership we have built as well. So, and 93% of our top line is now foreign currency revenue, which is again, as I shared earlier as well, one of the unique salient feature that we are resistant and with the currency fluctuation in the other direction. We have 250 plus active client, 80%, almost 80% of the customers are direct customers now. So that percentage has grown as well, which we own the customers and we are planning those accounts for the future growth, which I shared in my previous slide as well. So employees are, of course, growing as we grow. That's directly proportional to the growth. Next. Next, Rui, next slide.
Yeah, this is the same PKR, so I just...
Okay, so this is very important slide as well, which you can see now, client contribution to top 20 clients versus active clients are increasing as well, which are paying more than, and you see on the client metrics, we have now graduated to account level where we have $25 million account as well. Which is that's how the big companies and enterprises that you reach to 25 million, then $50 million accounts per year recurring revenue. I think that shows the growth. That's how you look at all the big SIs. We have also now another 10 to 25 million account. We have increased 5 to 10 million accounts as well. 3 to 5 million accounts have jumped significantly. You can see the number. So that's why I was saying enterprise clients, of course, keep adding. And now all of these clients slowly and like this is the strategy that how 3 to 5 million client goes to 5 to 10 and how to 1 to 3 goes to 3 million, 3 to 5 tier. And this is we keep growing and the 25 million account goes to $50 million, right? So that's what, and we have few couple of $10 million account that gives us sustainability, that gives us a predictability, and that gives us the growth trajectory that what we are looking at in the future years as well. So our strategy and the growth levers which I shared and the focus on enterprise accounts and existing accounts, land and expand strategy that what we have consistently followed, it's paying off, and we're super confident that it's going to give us the better results as well going forward. Next.
So
okay. We just wanted to keep brief and spend more time on a Q&A so we can address your queries, concerns, issues, challenges, whatever you have. Please feel free to ask in a Q&A section, as I shared earlier as well. And Zubair is going to read it for me, sorry, and then I will try my best to answer as many as I can.
Okay, thank you, Asif. I think the first question, Rui has taken it live, but this is the same comment that I started the presentation with, is what was the primary reason behind improvement in the gross margins in the third quarter compared to the previous 3 quarters. So I intentionally took it despite her answering it live. So I think if you could answer that, and that's a key theme of the results, I think.
I think I have shared in my one slide. That's why I summarized it as well. The growth levers we have focused on. We used to carry the large bench because we had the luxury to do it. So we were investing more in the newer things, newer technologies, and we kept those bench with us. And so we just focused back and narrowed it down. And now we are investing on certain things. Like one thing I forgot to highlight that when we started the year we had very limited AI use cases. Now we have plenty of AI use cases practical at the customer. So we were not just talking about the AI, but now we have practically done it. And we are pitching these services to our customers, which are very receptive. And that's a growth area that we are seeing. This has changed the complexion because you get the better rates when you sell these kind of services because it's a scarcity. And now we have practical work done. In last 9 months, we have done lot of investment before, and now it is materializing as well because they were unbillable investments. Like to answer your question, now it's billable, right? So of course, when you have unbillable, it goes affect your GP, and you have more bench. And if you and it's a people business, and as these unbillable investments that you make and bet you make that converts to a billable, it increases your GP because that's the only phenomena we have: efficiency, efficiency, and efficiency, right? and uh, and so this theme really worked. And also growth, as I shared earlier as well, like our fixed overhead has not changed, right? So we have not invested like heavily on our other shared services. Our shared services, all the shared services, infrastructure costs, and so on and so forth, that minimally has increased, but the revenue delta is 28%. So we are so it's these are the two main factors, I would say. And as we keep growing, that's a services business beauty, right? It's not a textile business or car manufacturing business where you have to import if you need to have 100 cars manufactured, you need to have a new plant for that, right? And you have to wait for 3 years. I can double in 1 year if I need to, without even adding any infrastructure. Now work from home is available as an option. So and the fixed cost doesn't go up. So naturally the margins are going to be up. Only thing that hurt us, as I said, 4% appreciation of currency, which I highlighted in my quarter to quarter constant, which has hit us badly because 93% dollar-based business and 4% appreciation with the 20% inflation or 30% inflation last year is definitely impact the business because we had to give the raises and the increases the cost, and currency didn't help and went into other direction instead of like staying at the same level, forget about the devaluation. So when the currency behaves normally, the margins get better. No rocket science, right? So as well.
Basically, it's better fixed cost absorption. You
Yes.
invested in the over the last year and a half, and now that fixed cost is now turning into billable revenue to
Yeah, and
some
also we
extent.
have stopped, as I shared in previous analyst briefings as well, and written down in our director reports as well. We are double downing now on our existing investments, whatever we have made. We are not opening new markets. We are not experimenting 10 other markets. We have experimented many. Now we have chosen that we have great opportunity to go deep versus wide, and we have not even absorbed like what the opportunity is in those markets where we are. So why we are just trying to have a spray paint approach. So we are very focused now, and we have seen the areas even within the market where we can grow. So we have narrowed down because when you are in the growth, you just try experiment few things. Now you know experimentation results. Okay, these three experiments worked well and these two didn't work. So let's focus and go deep into these three where we see still a lot of juice available, right?
So brings you to my next question is amongst the territories that you guys have opened up over the last few years, which area, if we were to jot down, what are the top two areas that you think are look to be having a promising future in? Like, is it the Saudi market, or which area have you narrowed down?
I think
Or if
Saudi by far, and we have like barely scratched the surface. I would say, we have still gotten a good numbers, but in my definition, it's zero. still we have done actually just barely started, so it's so much potential, so many opportunities available to scale, and so much. Still, I think it's slowed down a little bit from Saudi market perspective, but their slowdown is still, it's still a lot of opportunities. So when they will be in full swing, I think it will be great. Saudi is great. UAE is definitely the beneficiary of any bad thing happen in the region, so they are booming as well. So these two are the catalyst, and Qatar also started performing well for us. It was not there in the mix. Now it's getting bigger. So these three combined, and these are the three large market. Rest of the countries are smaller in GCC in any way. So we are not flirting too much with Africa. We're not Yeah, we're not flirting too much with APAC region. APAC region is sustainable. It's not like Saudi. So we really want to make sure that we put our best people where the growth is, and make the best out of it and improve our margins and the profit and growth.
Okay. I think the next question is how much North America is contributing. That the number is in the quarterly report.
Yeah.
Steps systems is taking to grow their business. That's a generic question. I think well answered. Systems relies on top 10 companies, and it contributes around 70% of the earnings. How will system diversify the risk? I think
That's not relevant and that's not right.
that's that lot. And the Middle East region continues to show significant growth, having increased by 49% to $36 million. The region now contributes. Can we expect it to maintain similar growth momentum in CY 25? And also, with the turmoil in the region, uh, if you were to look at it, you think that you can sustain this growth, or actually you've already answered that you just scratched the surface. So I think it's not relevant further. Um, Q5, how has your taxation changed with the introduction of the new UAE tax? Previously, your taxation was typically around 1.25% of the net sales, and now obviously there's a corporate tax in place in the UAE. So if you can dwell around that also.
Yeah, it has increased. You can see it's 10% roughly now to our sales, 9.9 to 10% versus 1 to 2% last year, because it's a corporate tax, right? And Saudi also has 20% tax on corporate income as well. And we are growing and we are profitable. So I think these things are, of course, out of our hands. So these taxes we need to pay.
Okay. Says that according to your 2023 annual report, the number of the employees at the year end was 7,398 with an average headcount of 66. What is your current? So you have already answered this. There's 7,000 something employees.
Yeah.
The real question is, are you planning to? Okay, then leave the next one. As shared in your financial, how would explain the PS headcount dispersion?
Good.
Yes. I'm
I didn't.
sorry, Osama Naeem, if you could type your question again.
I think
professional
he's
services.
yeah, he's referring to the Asif, the distribution of our PS resources in our markets. We have a slide on that in our presentation. We didn't present it
Yeah, I
today.
think distribution of employees, PS people mostly in Pakistan, of course, and then we have Dubai is the second, and then we have Egypt is the third, and then we have fourth is Saudi, and fifth is Qatar. These are the large five, top five, if that's how you should look at it.
Okay, and yeah, that's a good one. Somebody is directly asking the order pipeline at the moment. Can you share any number or range for the next 12 to 24 months period? I don't know
I
if you want to answer that, but if you want to.
I can't, of course, I can just generally tell the momentum is there, and I can say we have never had a uh, better numbers and better backlog as ever, right? So that's my answer. Never. This is what we, at the stage where we are today, is phenomenal.
What's driving that backlog? It's the Middle Eastern region.
actually the focus on signing up the enterprise accounts and focusing on signing these channels and partnership. That's why I put the slide. If you read these 6 points, these 6 points have all the strategy behind it, right? So we are not signing a small medium customers. We have stopped doing that, right? We have 93, so it means Pakistan business share is also increasing in numbers, but decreasing in percentage, right? So we are very in signing up, selective in signing up, and only signing up the deals which are strategic, where we are building some IP or some references in Pakistan or building the resources. Otherwise, we are just like doing well left type of a strategy. We are not just going into everything and improving on margins, contract renegotiation, having a better price, even like not saying that in Pakistan we will lose money, and which we used to say. Now we need to turn it around, make this region profitable as well, and only work with the enterprise customers where we actually don't have a cash flow issues, and also we learn something, and we also have reference and we make money, right? So that strategy we have tilted down towards. So you will see constant improvement in our negative margin regions. Pakistan is still -5% or so. It used to be -7, 8. So you've seen slight improvement, and you will constantly see upward trend in the numbers, margins, revenue, even if it is a little bit lower, but margin needs to improve. So we have stopped that strategy, that, okay, we will keep losing money in Pakistan. That strategy is gone. It's done. It's done and dusted, which we have done for many years. Now we have reached at that stage where we can demand the higher rate in local market as well. If somebody wants a quality service, we will give a quality service, but at a price point which whoever can afford, we will pay. They will pay, and we will do the service. Otherwise, we will skip. So we have very clear direction these things don't happen overnight. So it took us 9 months to reach at this point. Still, there are 1 or 2 quarters left where we can keep finishing up our old signed projects, old signed contracts, and we will have a fresh numbers as we move along.
So basically, you are at the stage now where you can pick and choose the business as to what to take on and what to leave out, right? That's it.
Yeah, we have to do it at this stage, because otherwise our margins will always be in that depression, and we don't want one region to drag our overall margins. If it is strategic enough, yes, we will make those bets still where we can afford to lose money. But if it has to be really strategic, that can give us potential 10x of return, or 3x, or at least 2 3x of return abroad. Otherwise, just not the sake for top line growth. No.
So something relating to this. See, I can see that at the end of 2020, you were somewhere in the mid 30s. Early 2021, we were around somewhere in the early 30s average. Then 22, we were around 30% margin average. Now, bottoming out in the first quarter of 2023, which is at 19.71%. Uh, can you give a guidance on the margin that you think is a sustainable margin that you guys think you will be able to achieve over the course of, or you will be happy with over the course of next year, 2 or 3 years? A sustainable margin that the management is projecting or has in mind that it wants to achieve that kind of margin.
I think with assuming the currency depreciates every year 5% year on year, I think anywhere close to 28%, 27 to 30% is a good target to achieve. If currency keeps appreciating, then of course it's a challenge on the numbers and the margins. Then I think we should sustain at 25% or so. So it all
So it's
depends.
going to be between 25 and 30, right?
Yeah.
If the
Yes.
if the
Yes.
currency appreciate, you will be at the lower end, and if
Yeah.
the currency uh, goes with the
5%.
number 5,
Yeah.
so
Yeah.
5% range. So 25 to 30%, one should look out depending
Yes.
on where the currency goes. Okay,
Yes.
that thing. I think it helps to analyze it in a better manner. The margins is the real driver of the numbers in the bottom line.
Yeah.
Okay, then if you could provide who he is answering this directly, thanks and well done on the great quarter. More on the GPM. Can you share the utilization? Can you share the
Asif,
utilization?
please go
You've
ahead.
already
Go
answered
ahead.
it.
Yeah, please go ahead.
Okay,
On
what
the
is the estimate?
utilization, Asif can address.
What
Asif,
is,
can
sorry?
you answer the utilization? There's a question from James. He wants to ask, can you share the utilization at the moment and what it used to be? Also, would be great to hear how the utilization differs between your markets.
Yes, utilization has improved few basis point over the last few quarters for sure. That's what we are tracking. The market-wise utilization, Pakistan market is the worst. Like I start with the worst, and then U.S. market is the best. Europe is again the second. Europe and U.S. is the best generally, then the Middle East, and then sorry, Saudi, the Middle East we guess called combined Saudi, then Middle East and Pakistan is the less utilization overall in the market size. And that's what I just shared in the like little while ago. That is what we are focusing and improving, that how we can turn this sector or geography around. Because if that from -7% to +7% or +10%, you will see a swing, right? A little bit of swing. So that's what we are turning around, and we are in the phase of slow but steady recovery. And as I said, like in next couple of quarters, it will be visible. At least the directions are direction that we have set in this quarter, but improvement will be visible.
So it would be fair to say that as far as the trough for margins is concerned, the June quarter should be the lowest, in
Yeah,
your
it
opinion.
was lowest for a reason as well, that we had two Eid religious holidays as well. So definitely, whenever these things happen as well, that seasonality in our business is also there. So it's not like every so when we have more Eid holidays, it was the first time in history that two Eid falls in the same quarter. Otherwise, it was like split it in two quarters, like for last 5 years or so at least. So that was one indicate. That was the one reason as well. Of course, there were other reasons as well, but this was also one of the reason.
Okay. Now, there's another question with the ongoing going boom in the development in data centers and generative AI. The system has any plans to leverage on these in futures? I think AI is what you are talking about.
Yeah,
Uh,
yeah, definitely. But data center business, we are not in data center. We don't want to, as I said, we want to focus on what we do best. We are not setting up our own data centers, at least not in the strategy for sure. But AI and Gen AI, of course, yes, 110%. We are doing it. And that's what I said. We have built many use cases in the many industries as well.
I think if you might have
Asif?
also gone, yes, please, we.
No, I was just mentioning that there are a few questions on AI. Asif, they want you to elaborate on the offerings and the sectors that we are targeting on in AI, and then how it's going to impact systems, the in-house teams, and our
Okay.
legacy softwares.
I think offerings I have already shared. The verticals you guys know very well. I think we have highlighted in many presentation. Banking, BFSI is one of the vertical or industry. We are very deep into it. Telco is another vertical in the region. We are very deep into it. Government or public sector in this region, we are very deep into it. Retail and CPG and pharma, where we are very deep into America and Europe side mostly, and less on our side of the world, region side of the world. So we are very much aligned into the verticals. Now we are not opening 10 other verticals. As I said, like we'll be very selective. We will open the vertical sign, but very strategically. Have all the juice in banking financial sector? Probably not. It's a lot of opportunities still out there. So from offering perspective, I think again, I will just reiterate, I think a digital wave is not going to end. Data wave is not going to end. AI wave is not going to end. AI wave is just started, and you can't do AI and Gen AI without the data, without the cloud. So the cloud and data is fundamental in our services to do AI and Gen AI and what and so forth. So these offerings are relevant. So whatever we are doing in today's scheme of things, these are all, we are not doing any legacy work. We are working on a cutting edge technologies and working on all the Microsoft tools, working on all the IBM things which are relevant, working on Salesforce, which is the one of the top, working on SAP strategy aligned with them, working on BFS Temenos, which you guys know, core banking platform. So we are very, very aligned. So we can't be like, we are following our principles, the leading principles. These six, seven leading principles, they invest billions of dollars to be relevant in the market space. Amazon, Google, and Microsoft. If they become redundant and useless, then of course we will be as well. So we are just following what they are doing and creating the muscles for delivery, innovation, creating IPs in those verticals and industries so we can have a differential advantage. And we just don't go with we are one of those companies where we have a cheap labor, please give us the work. No, we go with the strong value prop. Look, we have 10 use cases of AI. We have solved this customer problem in your vertical. We can help you in bringing that, and look at our demo, and this is what we have done, and this is the ROI that we have given to a customer. This is a similar ROI we can reflect. So I think this is the kind of we didn't have that before, right? We have been building this throughout last few years, and now we are at that position where our offerings are becoming solid, getting better and better. Of course, nothing is solid in our world. Every day it's a change. Every day you have to be vulnerable. Every day you have to keep changing yourself. Every day you have to improve, because you can't say I know it all, right? So nobody knows it all. Nobody knows.
There is a question that we is answering, but I think I should take it up for the benefit of the wider audience. Is the 25 plus $1 million customer newer or older customer turning into $25 million?
I wish there is a crystal ball that new customer comes and in 1 year it changes to 25 million. I sincerely wish it happens. But of course, it's not easy to do revenue recognition at the space with a new customer. So it's, of course, graduation from one tier to other, which I explained in my client slide. That's what we really target. The 25 million customer needs to graduate to 50 million. 10 million needs to graduate to 25, and 3 to 5 graduate to 510, and 1 to 3 graduate to 3 5. That's what the ambition is. That's what our focus is, to keep expanding and cross-selling, upselling. We have now enough clients, 250 odd clients. It's not a joke. Active clients, paying clients. If we keep just doing it and just get like average revenue of even couple of
Okay.
$1 million, you can see top line becomes.
Okay, there's another question with Mari setting up an IT firm to focus on ENP related IT business, data centers, cloud. Uh, can it impact systems business? I don't think, but I think one question that I have in my mind, do you look to collaborate with local companies that
Yeah,
are
yeah,
looking
we are already collaborating with them as well. So
with Mari?
yes, with we are collaborating, helping all the people that comes to us, right? And being the largest player, they ask for
So,
the
but you
help.
said you're not looking at the data center opportunity.
No,
So,
the data center has two components. One is
okay,
service component and one is hardware component. We are
okay.
focusing services component. So we will always remain focused on our core strength, which is services and not the box selling. We can't just import the hardware and put in the data center and be happy, like do the physical infrastructure of hardware and put the servers and racks and everything and just say we've done the work. That's not no value
So
addition.
you'll be providing services or collaborating with them, if anything, on the services
Anyone,
side.
yes, any large player comes, they come to us for services, right? Okay, how can my center be secured? How can
Okay.
what will be the NOC, SOC, managed services, that how can you run, make sure that this is, you can provision it effectively? I can go into the details. How can you provide the local cloud, the industry cloud, to the local companies? Because that's what the local cloud is important, right? Industry cloud is important. Banking customer is still a state bank allows, but they can't host everything in the hyperscalers, which is Amazon and Azure and so on and so forth. So local cloud strategy, who can do better than us, the industry clouds, right? So we have a huge potential in Pakistan for these type of services. If somebody pays us well, we will do it. If they don't pay us, we will not do it. Let's be very simple.
Okay, can you share the breakdown of employee outsourcing business versus project delivery?
I think more. I think it's a hybrid. It's most of the projects turns. We start and then it turns to managed services and resource outsourcing business because project ends, but the engagement doesn't end. So it's a very thin and blurred line because we don't want the projects to finish. We want projects to convert to resource or managed services because that's what stickiness is all about. So projects are lesser in a percentage, but that's what we want as well, that project ends. We don't want the relationship to end, right?
Okay. Another question, other than the fluctuating, it's general in nature, other than the fluctuating currency rates, what are the other problems system faces or or may face in the future? Kindly elaborate on it again if it's already addressed. It's asking mostly about the other risk other than currency.
I think risk, external factors, of course, like anything happen in the region worst in terms of war or anything which you can't control. That definitely put a little bit of travel issues and so on and so forth. Uh, if a lot of people, like right now, of course, it's a lot of people like start fleeing out of the country because of social unrest in our country. So that is the risk. Normal people will keep going, which is 15 to 10 to 15 to 18% turnover is acceptable. But if everyone tries to get the job and flee, then of course it's a risk. But that's a normal risk which we cover. That's why we have open other centers. We do hire the benches, but that these are the common problem every industry has. Every intellectual industry, every service industry. If you're running up your financial house, even how many analysts you lose to the Saudi market, to Dubai market? Just ask yourself,
But
right?
I think that that phenomenon should, in my own opinion, I don't know, you might have a different opinion, but I think uh, uh, the issue here is that the fiscal space that the oil and the gas markets were giving to these Middle Eastern players has gone now. So basically, the ability to attract talent goes with the ability to have with the fiscal space that they had.
Yes,
So
it's slowed down as well. It's slowed
it's
down, and visa issues have surfaced as well. So, like, if I would say that if the people are leaving, X number of people leaving in January, there's a tremendous drop now in the opportunity space. As you rightly said, the opportunity gets shrunk when you knew everything is like ballooning. Every giga projects coming in now, giga projects are hold on shrinking and focusing, and also the visa regime as well. Like not everyone is getting the visa now. Not everyone wants to go, but not everyone can go, right? It's
okay. Okay, this is one thing that a concern that I have, and I asked you previously as well. Uh, Basically, this brings to anything that the focus now is more concentrated toward the Middle Eastern region. And we all know what's happening in the Middle Eastern region. Of course, we don't have it in our control. So, how adaptable, how agile you are in terms of your resource allocation, that if God forbid anything goes bad, you can maybe cross sell or maybe you can move out to another region. Uh, Maybe if you can dwell on that, if you think
I
that
think
that's
Europe and America is the big market for us, right? It's still we have just I could say we have not scratched even surface here over there as well. Like if Saudi, I'm saying that it's like these markets are like huge markets. Then of course if there's something happen, we have that when you have the talent and supply, you might get a little bump, but that market is open. Then you try to like why we are focusing on Middle East region right now because it's a low hanging fruit right now. It's a lot of demand and nobody is addressing that. Indian like it's unaddressable market space, right, where the competition is relatively competition is there, but it's not as fierce as you go to these mature markets, right? Where here in the Pakistan, acceptability for the as an offshore center in the region is much better than going to, like, if I go to in the other part of the world. So it's when you have resources and when you have frameworks, when you do a cutting edge technology, then the companies in Europe and America even don't care where you work from. If you have the talent and you have the solutions, then you can create. So I think we are very well diversified. I'm very confident that this actually these market give us the referenceable assets, which we couldn't get into the Western part of the world
Right.
because we are too small for them. We are too small, tiny company, right? In the region, we are now with our size, we are sizable company, I can say. Still not big, but sizable to talk or sizable to be seen. That's the difference, right? Our size is, so we need to reach a certain level, and then we do an America and Europe strategy. It will be a blast because then you can be seen as a company who have like more than 10,000 plus people, these many references. You are seeing these channels, what we are establishing regional, they will convert to a global channel. And you sign up a regional player, they will become a global company. So it's a phenomena, right?
Well
So
answered, I would say. Well answered. Uh, there's a question that has been already answered, but I would like to take that since obviously it's close to everybody's hearts. System stock has experienced a significant derating from a forward P of 20 to the current 8 to 9x range. Consider,
33, we started with 33p. If you remember.
okay, yes, it was, but now actually, it would be more better if you answer it after you listen to the complete question. Considering the company's exceptional ROE, is management evaluating a share buyback to enhance shareholder value? Internationally, many firms leverage debt given its lower cost compared to equity to repurchase shares. Your views on that?
I think a very simple answer to that question is because we are growing. We are not, we need to utilize that cash for our growth. We are growing, like you have seen 28% growth. We have not borrowed the heavy money from the market. We have almost zero debt, right? If you've seen, and the result, it's a zero debt company. Of course, it's not a good sign that you should have a zero and you should have debt as well. I'm not saying that this is a good thing to have that, but we need to. Equity is of course important, but I don't want to say, for example, if we have $100 million cash, just as an example, right? If I just buy back the system share to just increase the share price, what would it give me? Why wouldn't I invest $100 million and create a $1 billion company, revenue company, right? So why wouldn't I invest that money in acquiring the company and build $1 billion revenue business? I think then once the revenue is there, then the share price and the margins are there, then share price will automatically, shareholder value will automatically increase, right? I think
Correctly answered.
the growth mindset that matters, right? So we are not driving the share price, we are driving the growth, right? So what I believe and what management believe that the growth will determine the future, and market gives us 8p or 6p. That's what I can't control because you need to understand. That's what I said, people don't understand in this country the services business, right? So once they understand the services business, once they look at the peer companies, the international investors look at it. I can give you 10 examples where similar similar size companies are taking 30, 40, 50x of price earning ratios because, and even their growth percentage is lower than us, right? Like everybody is not growing at 30%. Like now, Indian companies are growing in the single digit. You can look at anyone, any company, right? There are exceptional companies as well, but their multiples are 30, 40, 50, 60, even 80, 90 multiple as well. I can give you an example of that, right? Because why? They're high growth companies. And the margins are also in the similar range or lower, the net margin, right? If you look at the companies who are getting like 40x, just do the steady, for the peer companies. And not, I'm not the 40x, 40 times of price earning ratio, and their margins are 8 to 10%, and their growth is 20%, right? Or 10. So I think we are beating all these regional companies in all these KPIs. Like rule of 40 in services business is the golden rule, golden ratio. that your EBITDA plus your growth needs to be over 40%, then you consider to be the top-notch company in the world, right? In the service industry, we are constantly and continuously beating that golden ratio service rule, which has been established for years. But I think you have to see both. I think you can't see that in isolation. If you just see margin in isolation, that's the wrong metrics. For growth, you need to invest. And in our investment is all OpEx-based investment. So I think EBITDA plus growth needs to be seen together. If you just see in isolation, you will always see it wrong. And that's what the mistake that people do, terrible mistake. And but of course, the foreign investors, since they compare, they do it differently. That's why you look at our annual report shareholding patterns. That's why we have more foreign shareholders versus local, because they understand, they compare with the peer companies. They have to buy, if they have to buy the system shares today, similar company, they have to pay 4 times or 3 times, right? So yes, you can have certain discounting metrics, but discount cannot be 1/3, right?
Okay. Okay. While all the talk that we have been engaging on is mostly around growth in the Middle East region, you guys have also opened up a few outlets or a few franchises in the APAC region. And amongst the conversations, we haven't heard much about that. So
I
is
think
it the pie is very small,
is a pie
or
is a pie is small, and it's it
and
and
also
it
the success? Is there a
yes. Yes, its success is, I think, as I said, like it all depends on the focus where you put your best people, right? So while when we see the low-hanging fruit as a leadership, when I see that, okay, this market, if I put all the best people there, it could grow rapidly, and that region will take time because it's a lot of people there, and it's far from us. The visa regime is not that favorable, then it's a slow region. So we are not closing down those. It's still going to perform, but it may take a couple of years before it becomes the sizable, right? We
So
are
it's a
not
choice,
closing.
basically. So
It's a
it's a
choice,
choice. Okay.
of course. It's a choice, and uh, you just everything cannot be hockey stick. So if you have to pick up your battles in the strategy, so we just don't want to lose an opportunity while it is sitting on our table to just hope for the hope, right?
Okay.
So
Please.
there are a few questions. I think we are running out of time, so
Yeah.
there are a few questions around customers. How are we growing our customers? How do we grow smaller customer? Like when we acquire a customer, how we grow it into a big customer, like a $10 million customer.
I think
And then how, so related to this, what's differentiate system from its other peer companies or competitors?
easy
So I
answers.
think they
Okay.
both are relevant.
Yeah, so basically, growth, it's very simple, right? When you go into an account with a smaller project, you have to deliver first. And once you deliver the quality, first the client acquisition, is client good or not, right? So that's the first question. That's what we put a qualification criteria. Selective means this qualification criteria. If the customer is too small, they only spend $500,000 into their IT budget, we don't need that customer, right? Because that project will end and we will not be able to grow them. So selection of a customer is very important in our field. We were not doing this before because we were small, so we were signing up everything what could come to our way. We didn't have that luxury to even think about it. Whatever comes, we just sign and just bleed or deliver. Whatever happens right now. That's number one. So once you go into the good customer, every customer is good, sorry. Once you go to an enterprise customer, that's a definition, or small to medium to enterprise, not just small, medium to enterprise customer, not tiny small customer who does not spend money on IT. Medium to enterprise customer, they have the budgets. Okay. Now you go with the small projects and you land and expand, because we have now a lot of service offerings. We do end to end. We do infrastructure, we do security, we do digital, data, cloud. We cover entire IT span, and with the multiple channel partners, every customer is relevant to us. right? So we have so much opportunity to grow each and every customer if we have chosen the customer right. That is the number one. The second question is our USP. As I said, why we will be more successful, why we are so far a little bit successful. I would not say it's a lot of improvement required. That we are giving them top-notch service. Like, just let me give you an example. Like, if you everybody knows TCS, right? Tata Consulting. They have, if you look at their annual report, they have customer stratification. When I show 25 million one customer, they show 100, they start with $100 million customers. That how many? 80 of them are. So, and their lowest customer may be 25 million, and our lowest customer is 500. So look, so their focus is their CEO will not meet with $75 million customer. He can only cover 80 customer of $100 million each, right? So they give a stellar service to top 100 customer, and they give good service, average service, below average. And for $5-10 million customer, they can't even address. So we are giving those customers who are left alone by these large SIs, give them a stellar service, which they $100 million type of a service at their spend is $5 to $10 million. So we are at that space. So that is giving comes customer centricity and customer value that they deserve. Every customer is a good customer, deserve that kind of attention. But that I cannot give an attention to $50,000 customer today. So they have the similar problem. For them, $5 to $10 million customer is a smaller customer. For us, it's an important customer, right? So that is a huge white space available, or gray space or green space, whatever you say, between tier one and tier two to clients. So we have huge addressable market. So we have a
Our
huge
last few
differentiation.
questions.
Yeah.
I think there are few left, so maybe if you can answer quickly so that we don't run out of time. There is a revenue composition, geography, and industry-wise banking telco, but what sort of revenues are contributed by each services like clouds, solution, ERP implementation, etc.?
I think we have the breakup of that as well, but I think largely, I think mostly the digital services. And if you hear me out before, when you call about the digital services, it covers the full spectrum, right? Digital, data, cloud, AI, it's all interrelated and integrated. If you can't do digital with a good customer experience and so on and so forth. So it's everything is interconnected. If you do e-commerce, it's also a digital business. If you do CRM, if you do ERP, all it is connected. So most of the businesses, as I said, you can't do data, big project without cloud. Where would you store the data? Where? It's impossible. So it's really everything is tightly coupled. You can't do AI without a good data being there, right? So data engineering is the key principle for AI to be applied even, right? So all of these services are so interrelated. That's what I said. It's an extremely cross-sell and upsell opportunity available for us, because all of these are really tightly coupled.
Okay, what will be the future driving factor? Like systems now is monetizing NDC and investments in Middle East area. And previously, there was a question that was related to it that's also answered is how was the NDC experience? So maybe if you can
I
answer
think
that.
it's a great learning for us. It was our first acquisition, right? So always there is a great learning. I think I would be very honest. Of course, there was a first year of bumpy ride, and but we integrated well. I give kudos to my team. Now it's well integrated, well-oiled machine. But of course, there is a learning for sure. So if we do it next time, we will do it a little different. We have more learnings, we have more experience because it's the first one. So and now we are getting it was a, like, say for example, I would be very honest, I was expecting the results in 6 months. It took us 1.5 2 years to get the good benefit. And still I would say we have a lot of opportunities now there. So uh, the momentum is there, and it was a great strategic acquisition for us. It's opening the door, as I rightly said before as well, and we have a lot of cross-sell, upsell opportunities. Have we cultivated all in the last 2 years of acquisition? Answer is that, am I satisfied? No, we could have done better. But now, as I said, like this 9 months of grinding, we have set the tone. We are much better than what we were. and we will be much better in the few quarters. You will see the segment note will be much better than what you see today. So the path is there, direction is there, but honestly, we could have done it much better.
When does system expects to be a unicorn?
Unicorn is not our KPI. We need to be $1 billion revenue company.
Okay. Okay. Uh, One thing I think relating to NDC, this is my own question. You, with the openness in the regime of dollars by the state bank, uh, have you guys, or maybe rather, how active are you guys in seeking inorganic growth opportunities?
Honest answer to that is we were fixing a lot of things this year, like margins was under pressure, and as I said, currency didn't help us. We planned currency depreciation. We get currency appreciation, so margin was depressed. So the whole management and leadership was on the growth and the margin improvement. So we should have done the inorganic growth exercise, but we have not done, which we thought that we will do last year because we were not expecting these unforeseen conditions. So we will utilize it. And we did a lot of lobbying. If you guys know, we did to get this done in last quarter. So it was not happened like automatically. So first we have set the ground, get it approved. So that took a lot of work this year. Now we have at least this. So definitely once the things are, I just don't want to, as I said, to do too many things which take us away from our profitability targets and the growth targets. So once the management and leadership will be confident that, yeah, now we have done this, all the segments, all the markets have turned around into green. We have doubled down strategy on all of them. We will definitely pick up that thread because now the money is there, now the laws are there. Now it's just a shopping, right? And we have to hire some professionals to do that instead of we doing it. So we have the game plan, like which market, we have the complete game plan, which market, which sector, which industry, which technology, what type, what revenue, what culture, where everything is sorted, and which company to hire and do. We just need to do an execution, but I believe we were not ready, and I did not want to do it once we are not ready because we want to fix the basics first.
So I think you are ready now, and we should expect something in the next 3 to 6 months.
That I won't comment.
Uh, in third quarter, selling and distribution expenses for North America and Europe were higher Q on Q. Can you please share why is this?
The growth is there, I think, because Europe is, you would see that the growth is there. In Europe, we have signed up a direct business as well in Europe, one large customer, very large customer. So we have to spend money to grow that account. So that was one of the reason. And we are seeing more and more, as I said, like for diversification, we need to be ready for that side because which is untapped, Europe and America side, which is growing, but it can grow exponentially because the field is too big, right? Are we
Okay.
too big to cater that market? Probably not today, but definitely tomorrow that's the case.
Okay. One question from Musama. I think maybe we can take the last one also.
Yeah, this
IT
is the
companies were
last one.
not included in the normal tax regime. How long do you see this lasting?
I
Uh,
wish I had a crystal ball to answer that, but of course, I think it's I would say it's at least 5-10 years, definitely because but of course I don't have a crystal ball to answer that question. But because why I would say that because uh, if we need to really make a difference in the country, IT export is one of the IT and IT enabled services. I think we ignore BPO. And one thing I would like to highlight, we have added one component. Now we are very actively focusing on F&A and other outsourcing shared services, which a lot of Indian companies have done in the past. We see a unique opportunities while we are in our customers to grow that service because a lot of talent is available in Pakistan for F&A, procurement, and these basic services. And you do it now with digital services. Earlier, you should have done only labor arbitrage. Now with the RPA, IPA, and AI and Gen AI, we can combine these. That's what we are combining, the shared services with the automation. we have started and we won a couple of deals that gives us confidence that we will scale. That is another area that that is going to expand very rapidly. So what I was saying is it's there, you know. So these things can will definitely help Pakistan from that perspective.
Could I take the last question or done for now?
Yeah, I think we can do just one last question.
One last question. I
Then
think that comes from your competition directly. Huh? Somebody wants to ask any renowned customer names which you can share.
Hmm.
So you should treat him with one or two names so that
Why
he
would
can go happy.
why would I do that, right? But every customer is important, and you guys, from your perspective, it's not important. What I just said is important, that we are signing a quality customers, enterprise customers, and we are selective in signing up the business. That's the important answer for you guys at your level, and the name doesn't matter, right?
And my comment was equally important that it comes from the competition, maybe.
Hmm.
Just on a lighter note,
I think to be
uh,
honest, I think to be honest, it's I think we need more competition in Pakistan, so it creates an ecosystem, right? Right now, unfortunately, there is no competition, which really doesn't build the industry, right? So I really sincerely hope there is a competition in Pakistan as well.
I think that's it. I think we've done with most of the questions answer session. If there is anything that is left behind, we at Insight Securities and the management of Systems Limited also would be happy to answer. You can reach out to us. We can get your questions answered. I think most of the questions, and we kept it intentionally this way that more and more Q&A could be taken up. And if there is anything left still, we can get back to you on that. So thank you very much, Asif. Thank you, Ruhi. Thank you, Tahir, and all the
Thank you.
management team at Systems Limited for such an enlightening session. Look forward to more such sessions. And thank you. On this note, I would like to close the session. And thank you so much. Thank you.
Thank you, everyone.
Thank
Thank
you.
you.
Thank you,
Thank you
everyone.
very much.
Thank you.